everyone. Welcome to a new episode of One Vision FinTech Views. This is Theo, and we are back for the fall schedule. Joining us today is Rita Martins, author of Web3 in Financial Services, a fellow author at Kogan Beach, and here is her book. Welcome to the show, Rita.
Thank you. So great to be here.
It's good to catch up briefly before the holidays, and then the whole summer went by. Gosh, I'm still going back in time. I can't quite remember exactly when we met. I think it was one of Victor's events in Tech Futures, I wanted to say, quite a few years ago. My memory is failing me, but that was quite a while. And if I recall, you were the global head of fintech partnerships back then at HSBC. And then you went on to write the book, Web3 in Financial Services. It's been quite a journey. So tell us a little bit more about what got you interested in decentralized finance to begin with. Because you did a few things before you do what you're doing right now.
Yeah, for sure. And yeah, we have met quite a while back. I was also thinking which conference.
Yeah, right.
But it's been great so far. I guess that's one of the key things for me from conferences is all the great people you meet as well, which people don't always know about. But yeah, so my journey around blockchain and DeFi, I actually looked into this space around 2017 when I was at Accenture. So when I was at Accenture, looking into new technologies and how can you use new technologies for financial services. And at the time, they had one company that was using blockchain for reconciliations. And I was working with the finance team. And as you know, the finance teams, they have a lot of people just doing manual reconciliations. And for me, listening about this digital ledger, I was like, wow, this is perfect. This is going to transform finance. You're not going to need all these people just doing reconciliations and looking into different data and putting it together in Excel and then sending an email and then creating a dashboard. For me, that was the main way I started looking into blockchain was really around this opportunity to really disrupt finance. To be honest, it was too early for the technology, but also for the industry. At the time, we were still just in the early stages of automation. And so I kept looking into it from a personal perspective, kept looking into it and kept learning about it. And I think now we are at a stage where the technology has evolved, the ecosystem has evolved, the companies, they are much more mature, they have really tested the product and they now know what they're doing. And also from a regulation perspective, we have much more clarity as well. So I think we are into a much more interesting position where it's interesting to look back into this space and to engage into this space again. I wrote the book specifically because I feel like still it is hard to first understand this space. I mean, there is so much going on that even if you want to learn, where do you even start is a question. And when you look into the news and so on, the main things that you see is the bad part of it is you see all the hacks and all the problems that you have. And I wanted to write a book that really for anyone who was in the industry that wants to learn more, but actually touches about what does it mean for me? What are the real impacts that will have into me as a financial services expert and what are the processes that could be impacted. So it's a much more technical book for anyone who works in financial services who wants to understand a bit more about what some of these terms mean, what is DeFi, what is smart contracts, and to really see some of the examples of the companies who are already driving the change and who have already implemented some of these solutions. So for the book, I interviewed a few people that work within the industry, both from the traditional side, but also from these new DeFi and startup worlds.
That's the one thing I appreciate about how you go about doing it. And I recall there was a recent article that you published also around how traditional finance and DeFi are coming together and merging together. That's the one aspect that I don't know if too many people appreciate. I've seen and I've come across too many people that will say it's either this or this, and not looking at how can we actually bring the two worlds together and merging them together, because that is the future, right? I don't think we can completely detect from where we are right now. And at the same time, we also need to embrace changes and differences. So let's take a step back a little bit. What does Web3 mean to you? And why would it matter? You talked about writing the book because you want to talk about the impact on the people doing it. You want to talk about the processes, and you want to bring up examples of companies making change. Why would it matter for anyone who is working in financial services right now?
Yeah, so it's a very interesting question. And the first part of it is really what is Web3? I think when it started, the term being used in industry, it was much more around this data decentralization and data ownership as a response to some of the hacks and problems that we have seen with Web2 companies, like, for example, Facebook, where people suddenly realized that Facebook would own their own data. For me, we are now at a stage where Web3 is something bigger than that. It's really just the ecosystem of companies who are using blockchain technology to create new solutions. And some of them are going to be more or less decentralized. Some of them will be focusing more or less into data ownership. But I think it just, I see it as an ecosystem of companies. And within that, I even include traditional finance companies. They're probably using much more centralized solutions. But for me, they are using blockchain. They're using some of the new concepts within this Web3 ecosystem. Why does it matter? This is a technology which is already being used. I think what happened recently, and I talk about that in the book, was traditional finance people that would just say, well, I'm not interested in blockchain. There's just something that's happening in that block corner where you have all these problems. I don't want to engage. I'm not interested. The reality is that that back corner is no longer something small, something on the side, is something that is integrating, and many people are using it already. And so it's no longer really a question of should we even look into blockchain. It's a question of how do we make sure that our business model and our processes are ready for the future, and the future where you're going to have players which are using blockchain. And blockchain can bring many different benefits depending on what processes or what companies you're working on. So the main ones that people typically talk about is the process efficiencies for traditional finance. That's quite a big one, especially in areas where you have so many different intermediaries. I was just meeting someone for lunch, and we're actually talking about the payments part of it. And she was saying that she worked with a charity company, and suddenly she realized how many different intermediaries was in the payments chain. And so you had one intermediary, they take 3% fee, and then you had another intermediary that take another 3% fee. And so even just from that side, for example, from the payment side, you have not just faster payments, but also it's going to be cheaper payments as well. So blockchain is being used, for example, for remittances, where in emerging markets, individuals are sending money home using stablecoins, for example, which is cheaper and faster. So there is that angle of process efficiencies. And then the other interesting angle as well is around just democratization, for example. So with, for example, shares, you can fractionalize a share, which means you sell it in smaller fractions. And that means that more people can have access and they can actually buy those shares. So suddenly you unlock some liquidity into existing assets that you couldn't unlock. So for example, your house, your real estate, startups founders, they often need to get a loan, or they need to get some funding, and they go to the bank and it takes them a long time, and often it's not even approved because they don't have the typical financial background, for example, or don't have the information that is needed for a loan. But they have a house, they have an office, they have an IP, they have all these different assets that right now they cannot use for funding. Well, in the future, if they tokenize some of that and if they can fractionalize that, they can use that as collateral, for example, to get a loan. And so there is also a lot of that unlocking new liquidity and even democratizing assets for more people to be able to buy it as well. So there is a few different benefits, and this is why it's interesting and it's hard to talk about this the blockchain process, because it really depends on who you're talking about, that people are going to engage and be interested in different benefits. But that's also the beauty of this space.
So you brought up a really good point, the second part around tokenization. And that seems to be a big word I hear more and more, especially in Asia, not as much as in the US. It's definitely around, right, as a concept, but in Asia, it feels like that's what I spent recently a month and a half in Hong Kong and Japan, and it feels like that's what everyone is talking about, tokenization. What can we do? I am curious to hear from your perspective where you come from, where you are in the UK and Europe, etc. Do you see some of the differences, if you will, right? We talked about attitudes of, some depends on what part of financial services they come from. They might be more open, more receptive, and they might be not. Do we see similar differences from a regional perspective or from a culture perspective?
For sure. So, and part of it is also regulation. So different countries will have different regulations that allow you to test or innovate a bit more than others. In the US, where you are, regulation in this space, it's still not very open, let's say, let's use that word. And so many companies, even though they might want to test it, they cannot do it from a regulatory perspective. While in the UK, in Europe specifically, now with MiCA, it allows, at least gives much more clarity. I know that some people don't think MiCA is perfect for this space, but I think at least allows much more clarity. So if you are a startup and you are creating a product, you have some guidelines that now you can follow. While until now, you would be building a product, but you didn't know if tomorrow there was a new regulation that will come in and it will mean that you could no longer have the product the way you set it up. So I think regulation plays a key role in those differences of what you can see in the different countries. The other one as well is how the financial system is set up and how developed the country is. So in emerging markets, for example, where the financial services is not as developed as a developing market, they have different use cases, they have different needs. So for example, Brazil, they have been doing quite a lot of different use cases and testing around CBDCs and around how do they, for example, get more access to people, more financial inclusion. That's a key topic in more developing markets. And cultural as well. It's funny you mentioned Japan because Japan recently they did something very interesting and it's around culture as well. Because in Japan, apparently retail clients, they are quite keen to invest. That's just part of their culture. And Japan recently they tokenized a movie. So it will mean that you could buy part of the movie and then you'll get benefits from that. That's something that's very innovative, but again, it relates because there is the culture of that, there is the interest of that in Japan, and as well there is the regulation as well.
Yeah, the regulations in Japan is very interesting in that, and also I've seen quite a shift in trying to create a slightly different payment culture because it was and has always been a very cash centric. But also, even if we're thinking about AI, the way that the country is approaching AI and what they can use to do training, their approach is also different than what we see. So I love looking at, that's the one thing I love about traveling. It's, just seeing how different people react and adopt tech and innovation is always the fun part of what we do. But I do want to ask you, so given you mentioned 3 points and that's amazing. Thank you for that. The regulations piece, how established they are as a financial services infrastructure and also the culture. Where do you see things go? We are, right? We are more than halfway through 2024. Someone asked me recently, have we seen progress the way we wanted to? I'm curious to hear your viewpoint. I am a very impatient person. I know that. But for you, do you think we have made good progress? Not enough? What surprised you, and what do you feel?
It's funny because we are halfway to 2024. I haven't
Right?
realized that.
The year's almost gone.
Yes, the year is almost gone. I think like you, I'm probably would have hoped would have gone a bit farther. I think the reality is that these are very complex technologies, and this one specifically, I think as well, it's super interesting because it doesn't just touch, it's not just a new technology that it's going to update some processes. I think crypto in general is also trying to change some social norms and even some things that we used to really believe and accept as norm. So CBDC, for example, or stablecoins actually is really saying, well, actually, we don't need a central bank anymore for cash, for fiat, for legal tender. And if you think about that, that is a very social norm that we have been accepting for a long time. For a long time, we have said, yes, we need to have a central bank because they are the ones that are going to provide us what we need in terms of cash and so on. While stablecoins, they come in and say, well, actually, we don't need that. And that's a really transformative innovation, but also it really touches on cultural and social norms, facts. So I think that also plays a role around why it is taking maybe longer than some people expected, because it's bigger than just a new technology. It's going to change a little process. Having said that, though, I think we have made some good progress this year. And thinking about, for example, the ETFs one, we had the approval of the Bitcoin ETF early this year, and really after that, and Bitcoin ETFs has taken us years and years to be approved because there was previous submissions before, and only now has been approved. But after the Bitcoin ETF has been approved, we have seen the Ethereum ETF submission, and then we have seen the Solana ETF submission. And even though, yes, Solana is just a submission at the moment, but it does signal that the momentum is shifting, is changing, and that actually it does mean that maybe without us realizing, many retail clients are going to be able to actually own some of the cryptocurrencies. And so we are slowly integrating cryptocurrencies into retail clients, normal clients. And so I think the momentum is changing slightly. And I think the fact that Solana submission was done so quickly after the Ethereum submission, it does show us that the momentum is changing. To the point that you were making earlier around how TradeFi and DeFi are coming together, I think that's also happening for sure, where traditional finance companies, they are using blockchain. It's no longer a POC. Some of them have really live solutions. And then you have the DeFi solutions, which are much more starting to think about how do they get, in some countries where regulation is coming through, how are they going to adapt their business, their model to be aligned with that new regulation, so then they can tap into traditional finance, for example. And so I think those two also show us that momentum is changing, and I think it's getting much more into the mainstream than we would think. I have so many. It's funny because when I read the book, I thought this book is just going to be read by people within the industry for financial services. And I have a lot of people that are not from financial services industries that I just meet my friends, or I go and have a coffee with someone else's friends, and they are super curious about this space. As soon as I tell them I wrote a book about Web3 or about blockchain, they're like, wow, that's super interesting. I have heard about all of these, but what does it mean? So definitely people are still super curious and they want to engage with it. And things like ETFs or just getting much more mainstream, which means that we are changing. I think the industry is changing. It might seem that it's slow, but I think it's just part of the complexity of this industry.
Are you trying to say we're jaded? I think you're right. Oftentimes it takes stepping back to look back in to appreciate how much has changed, even though it feels slow because you're right in the middle of it. So speaking of change, what's keeping you busy?
So the book has definitely been keeping me busy. I have been doing some advisory stuff as well for some startups. And so yeah, that has been me super busy, and just keeping update with what's happening. I mean, this space is evolving so much all the time. So just keeping yourself updated, it's half of the job.
Yeah. I used to wish, actually, let me rephrase. We used to have actual breaks. I don't know if you remember those, like actual time periods where things are kind of slow that you can, take
a break.
a vacation. Yeah, take a break,
Yeah.
not look at the news, come back, everything is still fine. I don't think we've had that for a while. Traditionally it used to be, Fridays are kind of slow, summers are kind of slow. I don't feel that anymore. I feel like we're just constantly going and going and going because things just keep changing. Doesn't matter where you look. It's good and bad, I think, in some ways. I'm exhausted. I lost my break time.
Yeah, for sure. I think even like summers used to be much slower, and nowadays it's everything is happening time. So yeah, so it does probably show you as well that we are at that momentum where things are changing. We just don't know yet. And then we'll look back and say, well, actually a lot has changed recently in the last few years.
A lot has. So let's look towards the future. I think I'll see you again later this year. I'm not quite sure, but just in case. So looking forward into the next 12, 24 months. 24 might be too much now that you think about it. Let's look forward to the next 12 months. What gets you the most excited and why? Do you have a crystal ball you want to share with us?
I don't know if I have a crystal ball. I think they something that's still missing within the industry that I have seen more and more people working on. And that's really the integration of all the different solutions that are happening. So what's happening right now is that we have traditional finance, we have DeFi, we have startups really working and having live solutions. However, we still don't have connection between the solutions. And what that means, it means that there is low liquidity. And so I think we need to fix that. We need to be able to connect all these different solutions together. So then, for example, with secondary market, it's really thriving. You have all different buyers and you have all different sellers. I think that really is going to unlock the opportunity for everyone and making sure that that goes into the background and then people just see the user experience that it's super seamless. I think that's the other one that I don't know if it's in my crystal ball, but I think we need to start fixing it for sure around just making it super simple because it's so complex still. Even for someone like me that understands some of this space, it's still a very complex user experience. And I'm not sure we're going to be able to bring more people into this space unless we fix that, unless we really just have the technology going, fading into the background. There was actually an interesting survey a few years back then in the US where they asked people if they knew how the internet was made. And 1 out of 3 people thought they knew. Most of them didn't really know. But the ones that did think they knew, the way that they would describe would be, well, it just works, or it's up in the clouds. So most people don't really know how the internet works and use the internet every single day. And it doesn't really matter because it provides you value. It's super simple to use. So I think that's what we need to have. And I hope it's in my Christmas wish, let's say, for next year.
I can't agree more. We feel the same with open banking, for example, right? Talking about surveys. I remember there was quite a few that came out and asked consumers, are you using open banking? And to which I said, that is really silly because for a regular consumer, it really doesn't matter, right? For them, they have a specific need. They need to be able to do X. They need to move the money from A to B. They need to have a window into how they're spending, how they're saving, etc. We shouldn't ask the consumers, what tech are you using? It's more like, is it achieving what you need to do? So it's the same. It needs to just work, right? To your point, and abstract the tech layer into the background. And that way, I love what you're saying, just unlock more opportunities for more people and make it simpler. So that will help to increase adoption. And that's the
For
goal.
sure.
Yeah. So thank you so much for your time today. And before I let you go, can you share with us where can our audience find your book? What's the best way?
Yes, so it's available in local stores or online. Probably the best way is on Amazon. It's available globally on Amazon. So just go on your local Amazon and you should be able to find it. It's called Web3 in Financial Services.
Thank you so much. And I'll put the link in the show notes as well as we have it out. So thank you so much, Rita, for joining us today. Appreciate it. And I look forward to seeing you in person again next time, very soon, hopefully. And for the rest of our listeners, thank you so much for joining us for another episode of One Vision, the FinTech Fuse. We'll talk to you all next week.